Okay, MegaWhale team, welcome back to the channel and thank you for tuning in. I hope you're all having an absolutely fantastic day today. In today's video, we are discussing the macro charts, the potential for the start of a continuation much lower, the weekly candle close for both the price action and of course the weekly close below the macro uptrend of the RSI. We'll also be discussing the short-term price action, going over the recent breakdown, potential reversal targets, what needs to happen for the buyers to reclaim this trend, and exactly what we should be watching on both the short-term and macro charts. Before we get into it, smash the like button, hit the comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, the structural information, no hype, no BS, no emotion, just pure raw TA. If that is the kind of content you are interested in, join us on Telegram. This is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency, with Bitcoin, and the relevant economic news. And if you are interested in taking your trading to the next level, join us in VIP by clicking the pinned comment. Click the admin contact details over here to find out more information. You can also find our 50+ month trading track record and a 10-minute video showing you inside the channel via those two links. The trading channel will give you access to trading setups with exact entries, targets, stop losses, trade justification, exclusive analysis, and so much more, including access to a variety of group chats from the general chat, the trading chart and education chat, the help, news, trade setup, and community setup chat. Check that out, guys. Join up. We'll see you in there, and let's jump into the content. So first and foremost, as we can see, we have literally just had the weekly candle close. That was 50 seconds ago, and this weekly candle close was bearish. Not only did we see finally the weekly candle close underneath the weekly low range, but we also saw the RSI create a pivot underneath the weekly macro uptrend. This is a major warning sign, as it does suggest the weekly momentum is now in fact negative, and more so if we take a look at this RSI, we can see we've actually very slightly dropped underneath the RSI at 44.67, which was the low created on that Gaussian channel retest, suggesting that the price action may be massively overvalued in comparison to what the momentum is suggesting, which could allude to continuations toward the downside. We of course are going to be discussing what this means for the macro charts, as well as going over the short-term charts, discussing what needs to happen for the buyers to reverse this downtrend back toward the upside. We'll also be going over targets and everything else you need to know. But overall, guys, the weekly candle close has occurred, and it is a bad close. It is bad for not only Bitcoin, but moving over to the total market cap, we can see over here on the total market cap has closed just underneath the 50 EMA for the second time ever since that retest on the 2nd of September 2024. Again, not a great sign, and the total 3 market cap is now retesting that 50 EMA, closing underneath the $840 billion support. So both these charts have now confirmed deviation above the prior horizontal levels of support, signifying potential downward corrections are very possible. So the big question is this the start of a bear market? How low can we go? If we are entering a bear market, will it be a traditional bear market, or are we just going to see a multi-month downtrend or even a multi-week downtrend before we eventually find a reversal? We're going to be discussing all of that in today's video, but let's move over to the data first. 24-hour volume up 69%, 174 billion, with liquidations up a whopping 230%, 584 million, with 524 million of that coming from long positions. Absolutely insane stuff over here. People longing in this downtrend with excessive amounts of leverage, it seems, being absolutely liquidated on the short-term moves toward the downside. So very brutal market conditions over here, particularly after what was around the 2-day period of very tight consolidation, building up that liquidity, only to then see a pretty brutal correction back into these lows. Moving over to the rest of the market, the DXY is not looking fantastic. Again, we are still expecting a correction into that midline. We are watching to see how that economic data does come out this week. particularly core inflation, inflation month on month and year on year, is going to play a massive determining role in where we see the DXY move towards. So we're watching that. That is on the 12th of March in 2 days' time. The S&P 500 it is looking okay. It's not looking amazing just like the rest of the markets. We have seen now a correction into that 5,700 high, which basically was that October low, as well as a retest of the 50 EMA. This is going to be essentially the final stand, in my opinion, for the S&P 500, a point of which we have to see a reversal develop from. Otherwise, we run the risk of correcting back into $5,300. So if we do not see a reversal develop from this region right here, there is a very high chance we see an extended multi-week correction back down to 5,300 for the S&P 500, and that could initiate the start of potentially a higher time frame correction if this level does not hold. So overall, not looking fantastic. Moving from an invalidation perspective, we are still watching that daily RSI, so only upon the breakout of this daily RSI would we actually flip bullish again. Until then, we are sidelined, we are cautious, we are expecting continuations lower. Similar stance we have had for Bitcoin. If you've been following us on the S&P 500 analysis, we turned bullish on the S&P 500 over here. We remain bullish, expecting $6,000 the whole year. We were telling you 6,000. 6,000. When we hit 6,000, we went a little bit higher, and we actually turned bearish on the S&P 500 on the 14th of December, which was right over here on this candle where we had that momentum shift print, and we have been expecting lower ever since, and we are not going to be bullish until that RSI breaks through. If we look at Bitcoin, guys, if you've been following me on the Bitcoin analysis, you would know that I've been relentlessly bullish on Bitcoin ever since we had that 18K retest, and I accumulated more at 16.5K. I remained bullish the entire time. The entire time I remained bullish, even through these horizontal consolidations. I've said these were bullish consolidations, descending channels, horizontal consolidations. We had absorption present through all of this, and I actually sold all my Bitcoin publicly and sold all my altcoins publicly again on the 14th of December, publicly turning bearish right over here. The reason I did that was because I noticed the expectations in regards to perceived systematic risk as a consequence of future interest rate reductions was becoming more uncertain, and when we see that uncertainty develop in regards to main drivers of risk asset prices, eventually that spills over into the price, which can lead to downtrends, which we have now seen. So congratulations if you follow me through this 2-year journey toward the upside. We got in and got out basically at the perfect time. We now have the ball in our court to make decisions on what we think we should do next when we believe that is the right time to do. So right now, it is not looking fantastic, but let's jump into the crux of the analysis. Before we get into it, make sure to subscribe to the channel. But most importantly, guys, if you are interested in supporting the content, you can sign up to BitGet, BitUnix, or BingX. The links are down below. You'll get a lifetime trading fee discount of 15% off all your trading fees. You'll support me making this content on a daily, and you'll support yourself in your trading journey. Check it out, sign up, and we'll see you back in just a second. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other 2 exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay guys, let's go ahead and jump into it, starting on the weekly chart. Now, as we mentioned just a few moments ago, if you've been following the channel, we have basically executed this market to perfection the entire way. And the main reason we've done so is because we've been using momentum, right? A leading indicator for price action. Now, back in 2022 to 2023, we were watching a very important downtrend on the RSI. That was the downtrend represented by this diagonal trend line. It represented the momentum for Bitcoin ever since we created that bearish divergence and continued all the way toward the downside. What we can note is on the weekly chart, once that RSI broke broke through and flipped positive, that is essentially when we initiated the reversal in the trend. The price action eventually continued toward the upside. Now, the reason I'm telling you this is because if we take a look at the price action in this instance, we have a similar, and I wouldn't say exact, but a similar uptrend on the RSI, which is now broken toward the downside on the weekly. So these negative momentum or positive momentum shifts we see on the weekly can often lead, and not always, I don't always see this, but they can often lead to directional continuations in the direction of which the momentum broke. If we take a look at other scenarios through the last 2-year period, a prime example would be this downtrend on the RSI. Again, that was occurring while we were in this horizontal consolidation. When we broke through, we saw a continuation upwards. Another prime example would be that 8-month downtrend and that descending channel formation. We had that weekly downtrend on the RSI. When we finally broke through that region, that is only when after we saw the macro continuation upwards. So we can see how the momentum can be acting as a leading indicator for what the price can move to on the macro. So in regards to the breakdown on the weekly RSI, this is going to be a bearish trigger. This is a bearish signal. There is no doubt about that, meaning I am bearish on Bitcoin in the higher time frame charts until we've seen one or two things. Number one, a bullish trigger point break, which we'll talk about when we get to our short-term analysis. And number two, critical levels of lower horizontal support show levels of demand, and show strength. And we have not retested those levels. Again, we'll discuss what those levels are in just a moment. But I wanted to start by talking about this weekly RSI breakdown and why it's significant, showing you prior examples to how weekly momentum shifts have actually paved the way for directional continuations. So this could be the start of a higher time frame downtrend, and you're probably thinking, well, it's easy to say that now. It's easy to say we're going to a downtrend when Bitcoin's dropped to 80,000, but again, if you've been following the channel, we have been talking about this ever since we sold at the 14th of December, right? Ever since we sold here, we've been discussing that if we don't break through these highs, we do have the potential to lose that daily low. If we lose a daily low, we enter that low historical resistance range, which could lead to a macro correction, which would have macro consequences. So this isn't something new to us. If you've been following our channel, you're basically 100% in the loop. We've been right on the money the entire time with it. So let's move over now to a 3-day and weekly chart over here. This is the RSI indicator, the 62.09 on the RSI broke down around about 4 weeks ago now. Again, historically, when we lose a 62.09 on the RSI, we generally see corrections of 10% all the way up to 70%. I think it was around 13 of the last 13 of the last 17 times now, we have seen corrections of around 20% or greater, which is around the probabilities are insane for corrections essentially every time we see this 62.09 breakdown. Now, this indicator doesn't particularly tell us how far we are going to drop, but it tells us the drop was incoming as a way we were actually able to predict that this correction was incoming. If we move over to something like a 3-day chart here on the Gaussian channel, it can show us some major signs. Number one was a major warning sign we literally just printed, and that was a breakdown of the 3-day midline on the Gaussian channel. What you would notice is when we generally break through the midline of the Gaussian channel, we usually trend towards the lower band. So the lower band, we can see an instance over here, we broke through, we trended towards that lower band. Again, we can go back in history and show you multiple examples. Another example over here, we broke through, trended to the lower band, broke through, trended to the upper band, held as support, broke through, trended to the lower band, held as a resistance, broke through, trended to the upper band. So generally when we see these breaks of the midline, we do generally, I say generally, which is nothing is 100% certain, but we generally do move in the direction of which that lower band is set, and that is sitting around $76,000 at the moment. So the weekly, the 3-day or bearish, the 3-day suggesting a lower continuation as possible, the weekly is suggesting a lower continuation as possible, and around 76,000 would be that next level of support according to the Gaussian channel. And if we look at the VRPV, we can see a little peak over here at 76,000, which would suggest 76,000 is going to be the next potential support level where reversals could potentially develop, or where we would eventually see bearish exhaustion start to set in. So let's move over now to our daily chart. And let's talk about exact targets for these corrections. And then we'll talk about what needs to happen for the buyers to get back in control officially and reverse this trend, because it's looking really grim for Bitcoin. It's looking really grim for the buyers. As we can see here, this is going to be our daily. We have got the VRPV up. We've specifically got the visible range up. So we can see this 8-month consolidation taking us back essentially to the start of 2024 over here. So we've got 2024, 2025 onwards. This is our chart over here. As we can see, we are in a low historical resistance range. A low historical resistance range is essentially a range on the vertical scale where the horizontal volume requirements for the price action to move from one particular price to another particular price is significantly either lower or decreasing in comparison to periods of prior consolidation. So generally what we see is we see liquidity build up in periods of consolidation, and then we see the price action either be unable to sustain demand at these lows for various reasons or break through the resistances, entering these low historical ranges where that pent-up liquidity is then again used as a driving force to massively surge volatility in the direction of which the price action enters these low historical resistance ranges. So we generally see volatile, sporadic, and large moves when we enter these ranges, which is exactly what we have been seeing for the past 2 weeks now. So taking a look at this, where would we expect Bitcoin to go? Well, very clearly, and a level I'm seeing much more people talk about now is going to be this level here. And this is going to be the $74,000 region. I'm seeing a lot of people discuss this region as because, again, it's a key level, right? We have got our first initial retest, our last retest, and then our breakout. This is going to be the horizontal level. So naturally, prior resistance becomes current support, a level of demand. But I would like to note, we do have that $76,000 region, which may act as an initial support prior to 74K. So from 76 to 74K, we could potentially find an area of support where reversals could develop, where we eventually break that daily RSI and then potentially continue back upwards. Will a reversal from this level result in the weekly charts turning bullish and the price action continue up in the macro? It is possible, but it is way too early to say. We need to actually see how the price action responds to the support down here to determine whether we're going lower or we're going higher. At the moment, all we can say the probabilities are in favor of a continuation into this support, but we don't know the exact reaction and the macro impact of those reactions at that level of support yet. We have to analyze that as it develops. Now, the best case scenario for Bitcoin would be that we reach that support, we reverse, we see the price eventually crack this downtrend, and with that downtrend, we see the RSI break through. Now, whether that happens over here, whether it happens down here, whether it happens up here, it doesn't matter. It doesn't matter. The price of the asset is irrelevant. You need to start thinking in terms of strength and stop thinking in terms of price. The price is just a means to evaluate something. It's not a reflection of strength. It's not a reflection of how good the asset is. It really means nothing. We can see assets drop to astronomically low prices in specific market conditions, and that doesn't necessarily mean that the business behind the asset, if we're looking at a stock, is bad or is doing bad. It is just a stock price or asset price is a representation of the perceived value of the asset at any particular time, usually as a consequence of external events, usually news events and etc., and mostly how those news events may impact the asset market in a future period valued now. Remember, the market is future seeing. So if it expects the economic climate to turn for the worse in a later period, the risk asset market will adjust its value now in anticipation of what it should be in a later period. So we see the market front run a lot of economic events and a lot of economic narratives. So in this particular period, guys, we are watching when that RSI breaks out, regardless of the price. That in our eyes is going to indicate that the sellers have exhausted and the buyers will actually be able to potentially have a shot at reversing the trend. But until that happens, until we see the weekly downtrend break and that weekly downtrend, the RSI break, expecting lower prices is wise in my opinion. I think that's it, guys. I think I'm going to wrap it up there. I don't think there's much more to say. I think the weekly charts are looking really bad. I think the short-term charts are looking pretty ugly. Of course, we have broken through this uptrend, essentially moving exactly to our target. The next level of support is going to be this low at around 78. We lose 78,000. We are in for a lot of pain, potentially down to 76, and 74,000 will be those targets. In terms of the weekly close, as we mentioned, it was a bearish close. The 3-day is now under the midline. If we look at the weekly, we are under the uptrend, the RSI, and we are under our horizontal levels of support. If we're looking at the total market cap, we are under 50 EMA. If we're looking at the altcoin market, we're under 840 billion. So in my eyes, there's no reason here to be particularly bullish, other than if you were basing your expectations on biases and speculative models. But if we're looking at the actual data here, the charts themselves do not look fantastic. And that doesn't necessarily mean we won't find a bottom soon, but it means the probabilities aren't in favor of an immediate reversal. And when you come to trading, it is about probabilities. Trading is a numbers game. It doesn't matter if you take a risk and you will right once. If the risk has a significantly lower probability of success, that means when you replicate that exact risk over 100 trades, you're going to come out with a net loss. So it's about sticking to the probability. It's not about being correct. Trading isn't about being correct. It's about sticking to what is more probable. It is not about being correct every trade. It is sometimes about losing, and losing is perfectly fine. Stick to what is more probable, and your overall net result will be much, much better than if you had to stick to what you think is going to happen or what your subjective biases are inclined to you to actually believe. At the end of the day, guys, regardless if you are defining yourself as a trader or not, I believe everyone to some extent is a trader. If you have the expectation to eventually dispose your asset back to dollars, you are by some regard a trader. You want to make money. So you have to by some extent start to think like a trader and start to analyze the markets more objectively, to avoid these scenarios where you're down, 20-30% from these tops, and you're now starting to question, should I sell, when the warning signs were very present there. We were talking about them for weeks, and that's just how the market works. So thanks for tuning. Have a fantastic day, guys, and we'll catch you in tomorrow's video. See you then.